Hi there, welcome to Kneppy Invest and welcome to the 5th March 2025. There's about 50 minutes left of trading today. We've had a bit of a bounce, I've just noticed, because we were down, the XGO down about 1.2%. Now it's only down 0.85%. So we're rallying a little bit. Interesting day on the market, and I was led a little bit astray by Wall Street. The reason I was led a little bit astray is because they close at 7 a.m. local time in Brisbane. My shift finished at 7 a.m. So I really stopped following what Wall Street was doing about 6 a.m. And at that point, NASDAQ was up and Dow Jones was rallying pretty nicely. And I thought, oh, we're going to have a pretty good day on the ASX. And then I went for a run after work. I went to Woolworths, absolutely crazy out there, by the way. The last time I've seen it this busy was the day before Christmas. So, in fact, probably even busier. So people are stocking up because Alfie is, it's Alfie, isn't it? Alfred, yeah, Alfie is moving towards us. Anyway, so I came back home at about 10 a.m. And first thing I did, of course, was have a look to see how the market was doing and have a look at some announcements. And the market was down about 0.8%. And I was like, what's happening here? And then I had a look at Wall Street and what happened in the last hour of trading and just collapsed. So you never know what's going to happen in the last hour of trading. Who knows? Maybe in the next 40 minutes or 50 minutes, the ASX is going to rally significant amount. Who knows? Maybe the tariffs are going to be that Trump has implemented on Canada and Mexico and China will be removed. Who knows? Anything could happen with Donald Trump. Okay, so in today's video, what we're going to do is we'll go through the ASX today, as I always do. We'll have a look at the best and worst performing sectors, indices, also companies. I do have a top 5 stocks of the day, but not much to choose from. However, I do want to speak about or talk about Guzman and Gomez. They did get an aware letter or request query from the ASX. The other 4 companies I might talk about are XReality, or maybe it's XReality. I forget what it's actually called. Share price of that company was up about 15% on some sort of debt, something. What else? Oh, Hillgrove Resources doing a capital raising. I'll talk about that company. A company called Immuron. I call it the poop company. And the reason will become clear why I call that the poop company when I talk about them. And Clarity Pharmaceuticals. I'm hoping the share price is up because they did release what I thought was pretty good. Yeah, 3.37%. So on a pretty big down day, I suppose that's pretty good. A few other things I want to show you. A few tweets and something else called the GDP now, which sort of forecasts the GDP in the United States over the next few months or whatever, and that is a little bit concerning. We can also have a look at trading economics. In fact, let's have a look at that right now. China services growth unexpectedly strengthens. That's pretty good news. I just wonder if they came out at a couple of hours ago, because I did notice there was a bit of a bump in our market about 2 hours ago. Australia fourth quarter GDP growth hits 2-year high. That's pretty good. Economy grew by 0.6% quarter on quarter. That probably means our GDP per capita actually grew. That's good news because we have been in GDP per capita recession. I think the best way to say that is a per capita recession. What else? Yeah, dollar gained slightly as Trump addresses Congress. I had a look at what he said, nothing much in there. I'll be honest with you, nothing much of a surprise. Okay, so before we have a look at the ASX today, let's have a look at a few tweets and then GDP now from the Reserve Bank of Atlanta. Tweets. Okay, I have been talking about, and I have talked about Smoot-Hawley Tariff Act a few times now, and I just want to, just to show you that I'm not talking out of my ass. So I'm going to show you a few tweets. One from Gary Black, and this did gain quite a bit of traction, 8.1 million views. So Gary Black, don't know who he is. Yeah, I voted for Trump, but I never thought he'd be so foolish to actually move forward with 25% tariff tariffs, given the well-documented history of how the Smoot-Hawley Tariff Act of 1930 triggered the onset of the Great Depression as global trade flows dried up. I'm going to have to disagree with him with that. Now, I'm not an expert on the Great Depression, but the Smoot-Hawley tariff did not trigger the onset of the Great Depression. It was already happening. In fact, Smoot and Hawley brought forth this act to reinvigorate the economy. That was the hope, to reinvigorate, but it did the complete opposite. So Smoot-Hawley was not the cause of the Great Depression. It just made it worse. So I do have to disagree with Gary Black, but he does make a point here that Trump mentioned this numerous times, that he was going to do this when it comes to tariffs. And I just can't believe people voted for him when he said that. And then now they're in disbelief that he's saying what he said he was going to do. So I find that really weird. In fact, if I did vote in the American election, I just could not vote for Trump because of tariffs. There are some things I like. There are some things he's doing that I like. And the other thing I should mention is I'm quite apolitical. I won't ever vote on party lines. I vote for policies of the individual politician or the party. And because of Trump and his fascination with tariffs, there would be no way I could vote for him because, yeah, I think tariffs are bad generally. Anyway, so that's from Gary Black. I have heard a few interesting rumours out there. So there is one here from Unusual Wales 6 hours ago. US Commerce Secretary Lutnick has said Trump may roll back Canada and Mexico tariffs tomorrow. So we'll see if that does happen. If that does happen, we should see a significant rally. And it would not surprise me if this happens. Because even though I would not vote for Trump because of his tariff views, I still think, part of me believes that Trump is just using the threat of tariffs as a bargaining tool. So there's that possibility. But I believe in his address to Congress tonight or whatever, he doubled down on tariffs. I think he even said, yeah, he's doubled down. He didn't mention anything like that. Vincent Galasso, this is another one that had a few, not as much as 8.1 million views, but Vincent Galasso, last time Canada did big retaliatory tariffs, 1930. Yep. In fact, I mentioned this at work to someone. The last time we had a really bad or big tariff trade war was in 1930, and sometimes history, it doesn't repeat, but it often does rhyme. Anyway, so last time Canada did the big retaliatory tariffs after Smoot-Hawley in the Great Depression. The result, trade collapse and tariffs. US and Canada explain half the economic contraction from 1929 to 1934, half. So again, it exacerbated the Great Depression. It didn't cause it. Anyway, so those are a few interesting tweets. The other really interesting rumor I did hear, this could be just a conspiracy theory, that this is all planned. The Republican Party, or that what's that stupid document that everyone's talking about? I have no idea what it is. But this is the plan, to absolutely tank the American economy now in the first year of Trump's presidency. And then in the last 3 years, there should be significant growth in the American economy. So it looks really good for the party going into the next election. So I did hear this and I went, actually, I can actually see that actually happening. And I can understand why they want to do that. It's sort of like when you do get a new CEO coming into a company and they're struggling and they make these really hard decisions, really tough choices, and the company might perform really badly in the first year. But then after a few years, the company starts performing really well. So would it be surprising if that is the plan? And to be honest with you, it sort of makes sense. It does make sense. Anyway, and I mentioned there's actually quite a few things that Trump's trying to do that I actually think are good ideas, particularly when it comes to government inefficiencies. It's just the way they're doing it. But yeah, definitely government, there are heaps of government inefficiencies out there, and I would like a more efficient government, but I've always thought that's just a pipe dream of mine. Okay, and the other thing I just wanted to show you was this GDP now, which is quite scary. So this is a forecasting model. They take data and they try to spit out what the GDP might be in the future, and it's just collapsed. So latest estimate, 0.28%, March 3rd, 2025. So that was yesterday. Yesterday, not our time, their time. So the GDP model estimate for real GDP growth as seasonally adjusted in the first quarter of 2025 is negative 2.8%, down from negative 1.5% on February 28th. So in 1 week, it's gone from negative 1.5 to negative 2.8, and they've even got a graph here. It's just collapsed over the past few weeks. And the main reason it's collapsed is because, one of the main reasons is because of this tariff trade war. It's not going to be good for anyone. I do see on occasion people on Twitter or X trying to justify tariffs. It's going to bring back manufacturing to the United States. That's not necessarily true. And we've seen actually companies leaving the United States because it'd be cheaper, once all the tariffs are in, to make their products overseas. Because if they stay in America, all the imports they have to bring into the country to make their product will be hit with tariffs. And if they go to Canada, there won't be any tariffs on the imports. So it's actually cheaper for them to actually manufacture in Canada versus USA. There are companies who are actually leaving the United States because of that. But also companies who will be going to the United States. So I think it's going to be a wash. And then, yeah, last time Trump was in, it was not a success. We didn't see an increase in manufacturing jobs in the United States. In fact, they had to spend a lot of their money they did get from tariffs to subsidize the farmers who hit hard by Chinese tariffs. Anyway, so you know my thoughts on tariffs. Broad tariffs just are bad for everyone. Okay, so let's have a look at the ASX today. Yes, let's have a look at the ASX today. I'm just going to refresh this because I don't think it updates. I was hoping it would get into the negative 0.7. Tech is only down 0.54%. Resources is not down all that much. In fact, resources was up at the start of trading today. Now, during most of the morning into the afternoon, all the indices were dropping. I was keeping not a close eye on it, but every so often I would update it. It got down to a negative 1.2% at about midday or maybe 1 p.m. And then we did see this little bit of a rally at about 2 p.m. I wonder if that is that Chinese data, or maybe it was the GDP numbers in Australia. That could be it as well. I'm not sure exactly, but because it happened right on 2, maybe it's the GDP data. And it was good news. It was good news. So GDP up for Australia. So yeah, so interesting day and another bad day, however. But it's really weird because I'm feeling better because we're not down by over 1%, but we're still down by nearly 0.9%. It's just a weird feeling. If we have a look at different sectors, there's one sector down big. I did have a look at this before I started recording, and I'm like, staples down 3.22%. It's supposed to be defensive, not down 3.22%, and they're all down except Cobram olives. Maybe olive prices have risen. The other thing I did see with in this was Cobram olives was up and Select Harvest was up. So that's olives and almonds. So maybe both of the prices of those have gone up. Anyway. So if you have a look at the staples by markups, just down big. Woolworths down 3.3%, which is weird, unusual. Coles Group down 3.9%. Treasury Wine down 5%. It's just a sea of red, except for A2 Milk again and Cobram Estates. Well, A2 Milk chart looks pretty good right now, but just red across the board. Okay, and the other one that was down was energy, discretionary, financials, industrials, all down by more than 1%, and materials is up. It's a good day for mining, and I'm thinking it must be gold. Yeah, gold's up a little bit, and banks have had a bad day, down 1.4%, and the ASX 20 down almost 1%, suggesting the big banks are down a fair bit. I'd say the big banks are down between 1 and 2%. Let's confirm that. 4 companies are up, but let's have a look at the list of ASX 20 companies by market cap, and yeah, CBA down 1.22%, Westpac 1.32%, NAB 1.74%, ANZ down 1%, yeah, so they're all down between 1 and 2, and looks like iron ore has had a nice little rebound with BHP up 0.49%. Telstra was also up, and I think the Telstra chart probably looks pretty good. It's really weird for me to say that when I went through some of the results, Telstra results actually, in a weird way, not surprised, yeah, surprised, but also impressed. I never thought I would say ever that Telstra results actually impressed. And you can see that just by the chart. That's the 1 minute chart. So we have to go to the daily chart. Yeah, you can just see that chart. The reason why the share price has sort of taken off, is because of the results. The results actually were quite good. Yeah, it's really weird to say that about Telstra. I am Telstra's biggest critic, by the way. In fact, if I had to choose 19 companies in the ASX 20. Oh, I was going to say Telstra would be the one I leave out. I'd probably leave out Woodside, to be honest with you. Yeah, I would include Telstra. I'd leave out Woodside, but Telstra has not had a good history on the ASX. Anyway, so the 4 companies that are up, I'm assuming Iron Ore, Ed Tech, and Telstra, of course, Telstra. But not Fortescue down. Fortescue's down 0.74%. Okay, now on to the best performing companies today, the top gainers. Top gainers. Nothing. There's nothing. Although, let's have a look at a company called Litchfield Minerals. Share price up 31.58% on okay turnover, although the market cap is 3.53 million. Oh, no. It's just too small. This is just probably, if they did release anything, it might be just drilling results. Let's have a look. Share price is now up 47.4%. There we go. A major discovery, 1 kilometer plus high chargeability target found. Okay, so that's what's caused the excitement today, a major discovery. I would not personally get seduced by this sort of announcement, but there are some mining bugs out there, mining aficionados, mining investors who love mining field or the mining area, space, whatever you want to call it, and I've forgotten the TIG code, LMS. I'm just not a geologist, and I don't have any. I think you do need to really understand these companies. You really need a bit of experience, maybe not experience, but expertise. Well, that's the same sort of thing. I do think you need a bit of knowledge how to read these sort of announcements. Now, if you have a look at Litchfield Minerals chart, the company hasn't been on the ASX too long, in fact, about a year, and the chart does nothing for me. So the only way I might even think about buying these sort of companies is just through a trade. Nice volume, however, really good volume. So that's Litchfield Minerals. After that, nothing much. Boring as can be. So let's have a look at the top gainers by market cap. Maybe you get something in here. Oh, go West African Resources. Okay, so this is one company I do own, a gold company I do own, and I've owned it for quite a few years. I'm just waiting for their new project to go into production because not sure. The market is fully pricing that project currently in the company. So maybe this is a step in the right direction. Clinuvel up 6.35%. Go Clinuvel. Superb. In fact, it's had a couple of good days, I think. In fact, let's have a look at the chart for both of these companies. I'm a little bit biased. I own both. Why not? West African Resources. Yeah, the chart actually looks. Oh, the chart looks. Actually, in saying that, why am I a little bit wary right now? So, where the share price is for West African, you can see the share price getting to these levels back in September and October last year. But I think this is going to break out to new highs quite quickly. Maybe not. I'll give it a few weeks, but I think this chart is looking like it wants to break out to new highs. So West African Resources chart looks pretty good, but a lot of gold companies chart looks good. And Clinuvel's had a few good days in a row. The thing that really intrigues me about this little bounce is the volume. We are seeing some increased volume. That's intriguing to me. So there is a bit of strength to this rally in Clinuvel with that volume coming through. So that is interesting in itself. And funny enough, just before it really started to rally, in fact, the volume started to increase the day it started to rally. So that's interesting. So maybe there's a fund manager out there who sees some value in Clinuvel. I do see some value, but I would not be surprised if this rally starts to peter out eventually, just because there's still a lot of negative sentiment in this company, just because share price has dropped a fair bit. Other than that, we have Appendix had a good day. Money Me's had a nice little rebound. That's a possible sell. A few companies that have fallen a fair bit over the last few days have actually rallied today, including Mayfield Group. I'll just show you Mayfield Group. This is another one I own. So I noticed this one dropped a lot yesterday, and and you can see a fair bit of volatility with this one, which is sort of the sign of the times right now. A lot of these sort of companies will be highly volatile. But the main thing is they did release results. I don't think the results were that bad. And we did see some high volume coming in January, which I always look at. Okay, now on to the top losers. I don't. Yeah, if you look at the top losers by percentage change, really low turnover. All these companies are really small. Most of them are below $10 million. A few of them are just above that. It's not until we get to a company called Opthea, share price down 13.3% on really big turnover, and that company does have a market cap of almost $1 billion. And I believe, and I could be mistaken, this is a story stock. To back that up, I did have a quick look at this earlier when I saw the share price was down. They haven't released anything. 2 days ago, they did release. Opthea announces phase 2, the wet AMD publication. That does not sound interesting at all. And the share price did drop a fair bit on yesterday. So they released that at 8.22. There's no reaction to that on the 3rd. The reason I know that is because if you go to trade history, on the 3rd, the share price was flat. So I'm not sure why the share price is down 10% and then 14% in consecutive days. It could be just noise. It could be, that could be it. It could be just noise. Noise can send the share price of companies down that amount. Yeah. And you just see the volatility in the share price of this company. And that's a problem with story stocks. How do you value a company that is not selling anything? It's so hard. And that's why you get the volatility. A company that you can value really easily won't have that volatility. So that is and can be the attractiveness of these type of companies, particularly if you focus on volatility like a day trader. I would say that a lot of day traders would love this type of company just because of the volatility. So maybe there is a reason why the share price is down a fair bit. I don't know. And to be honest with you, I don't care. I'm just going to confirm this is a story stock, by the way. The best way to do that, I'm just going to go to the most recent Appendix 4C. I suppose I could go to their business update, but I always go to the Appendix 4C. They released that on the 31st. Because they released it on the 31st at 10:43 a.m., more than likely it's pretty crap. And when I say crap, I mean no receipts. And there we are. Oh, geez. So no receipts. Definitely a storage stock. Look at this, the spending on research and development. In fact, they did receive $10 million in government grants and tax incentives. However, they were still operating cash flow negative by $31.4 million. Now, the company has a large market cap, which means if they do a capital raising, they can raise a lot of cash with not diluting as much, if that makes sense. So they could raise $100 million, and that's like a 10% dilution. If they had a market cap of $100 million, and if they wanted to raise $100 million, that's 100% dilution. So that's the benefits of a company that has a large market cap like Opthea. They can actually raise a fair bit of money with less dilution for shareholders. And they are burning through a lot of cash. So how much cash do they have? 170 million. No, there it is. 131.9 million. That's financing facility. They have debt, 170 million and $131.9 million of cash. So they do have 4 quarters of cash on hand. It's not a lot if they burn at this rate. If they burn at this rate. Okay, so that's Opthea. I couldn't tell you what they do. And if you have a look at the worst performing companies by market cap, that's the only interesting one here. The rest are really small. Let's have a look. Top losers by market cap. Hyperion, which is another story stock. Opthea, story stock. WA1 Resources, gold exploring company. Not sure why it's down. Let's have a quick look. Because gold's up, so why is this down? Nothing, it's just noise. So I'm just going to have a look at the chart. So it could be just negative sentiment. It could be just noise. Yeah, I think this is just noise. And the reason I say that, I think the share price is now in a downtrend. So this is not the sort of company you want to be in the gold sector because the trend is down. And what else do we have here? We have a few other smaller companies like Shaver Shop, Aroa Biosurgery, E-Road, AI Media, which I actually do like. I want to do a video on AI Media because they do have 5 or 6 year goals. 2028. They have 2020. No, is it 2028? I think it is. That's 3-year goals. And that's about it. Anyhow, so let's turn our attention to the top 5 stocks of the day. Not much to choose from. I'm telling you right now. In fact, we can have a look. Quick look. Maybe something has been released since I last looked. at the price-sensitive announcements. Maybe we've seen a trading update from a company, but the answer to that is no. A company called FFI Holdings has released a leadership update announcement. Don't care. Triangle Energy Cliff Head Sale update. Don't care. Quick Step court-approved scheme meeting, so they're being bought out. Don't care. A couple of capital raisings. Don't care. Yeah, nothing much has happened today. Nothing much. When Albion Resources has appointed a CEO. Oh, by the way, Oceania Healthcare, I didn't include this one. They did actually issue an announcement titled Refinance and Market Update, and I did not have a look at it. So that could be a mistake. Let's see if the share price has moved. Yeah, not that much. Yeah, let's move on. Okay, so coming number 5, we have Clinivel. I'll be honest with you, I haven't actually listed these by any order. I've just put 5 company ticker codes down, and there's no order here. So which is going to be the stock of the day? Should it be Gomez? Yes, I don't know. Anyway, Clarity Pharmaceuticals, I thought did release a good announcement today. Share price is up, has been under a little bit of pressure because the share price has dropped from the high of 318 to 305. That's understandable because the share price is in a downtrend. So you're going to have a fair few shareholders who bought at high prices and now want to sell, and they don't care if the company releases something good. They don't care. It's a dog stock because the share price fell after they bought. They're blaming it on the company, not their decision-making skills. Anyway, so Clarity Pharmaceuticals, secure trial update. I think that was it. Yeah, this sounded good. That was here it is. Secure trial update. 92% of pre-chemo participants experienced greater than 35% drop in PSA levels across all cohorts. Cohort expansion phase commenced. Now, I'm not the biggest expert in reading these sort of things, but it did sound positive. They also released another announcement. Clarity signs copper 64 supply agreement with UQ. I'm not sure that would trigger a bit of an excitement in the market. I doubt it. I think it's the other one that did that. So let's have a look at the chart for Clarity. And this chart does not look good anymore. It did look good for a while. Definitely the sentiment has turned negative. Share price is in a downtrend. There it is, a beautiful looking downtrend. Beautiful. Study this chart, and you can see shift in sentiment, shift in trend. So again, uptrend, you want high highs, higher lows. Downtrend, you want lower lows and lower highs. And this little high here, so back in November, see how it was rallying, but it just couldn't get back to the previous high, and then it started falling. In fact, if I was trading this, I would have put my sell order at $6.50. So the share price has halved since then. Maybe I should have sold my shares in this, but I thought the reason I bought shares in this, it was not a trade. It was just a long-term hold. And I'm willing to buy more if I see the share price drop to a certain level. Anyway, so that's Clarity Pharmaceuticals. Okay announcement, I suppose. Immuron. Actually, we'll leave this one to second last. We'll talk about Hillgrove Resources. I was an owner or holder of this company, and then I decided to sell out because I wanted to raise a little bit of cash, and I was getting, I wouldn't say fearful of the market, but it's all about preserving your capital. And at this point in time, there's a little bit heightened risk when it comes to the markets. And because there's heightened risk, I just want to increase my cash level. Doesn't mean I'm going all to cash. Don't have that confidence, or never have that confidence to go all to cash, because you could be wrong. I could be wrong. Anyway, so one of the companies I did sell was Hillgrove Resources. And the main reason behind that is just no momentum in this company in their production or the charts. So this was an easy sell for me. And then they've done a capital raising. And that's sort of validates me selling. Anyway, so placement and SPP to increase copper production. I did go through the investor presentation. Now, I think things could turn positive for this company in the future. My big question would be, why are you raising capital? You're in production. You're talking about you are operating cash flow positive, so definitely not free cash flow positive. So it seems like they do need that cash because they haven't quite got to that cash flow positiveness that they should be aiming for, and they still have to raise money. Now, the reason behind them raising money, company usually will give reasons, and they've done that here. They've given a reason somewhere, if I can find it. I have a feeling I actually did not look at this. I looked at the presentation, and definitely in the presentation, they do have reasons why they should always give reasons why they're raising capital. Okay, so let's open up the presentation. So whenever a company raises capital, they have to tell the market why they have to raise capital. What are they going to put the funds to use? Okay, so let's have a look for this announcement. So it's not a bad presentation. I don't mind this presentation. It gives me a little bit of a better feel for what they are aiming for. So continuing the operationally successful production restart. So they are anticipating increase in production. So that's a good thing. Looking at organic growth. They're talking about financials. So not yet profitable. EBITDA positive. Yes. But EBIT negative and loss making. And operating cash flow positive, $21 million. But free cash flow negative, I think. Consistent free cash flow generation. They're not there yet. Maybe that's an aim. They do have a bit of a goal here, but not somewhere, I think. Talking about operating cash flow. Where's this? Here it is. Here it is, the equity raising. A lot of dilution here. So 371 more shares on the registry, and it was at a bit of a discount as well, which is obvious because most capital raisings are done at a discount. Although, in a way, I'll be talking about a capital raising, which is not, no, it sort of is it's an equity raising that was done at a massive premium today. Thank you, XRG. Anyway, not really a capital raising, but you'll see what I mean. Here we go, use of funds. So here it is. This is the whole thing. Whole reason I was going through this presentation was to find this slide found on page 23. What are they using the funds for? What I also find interesting is when they have raising costs, and sometimes it's quite high. So you need this money to spend money to raise capital, which is weird. Anyway, so mine access acceleration of Nugent deposit. Do you have to accelerate that project? $8 million. General working capital and raising costs $5 to $8 million. The worst sort of capital raising is when you see all the funds going to general working capital. I don't like that. Don't like that. That's the worst type of capital raising, when it just goes to working capital. So that's telling me the company is not free cash flow positive. They're not there yet. They might get there, but they're not there yet. Okay, so let's have a look at the chart for Hillgrove. So one of the reasons I did set out, there's just no momentum in the company yet, and the chart is horrible. Chart is negative. Share price has been going down for a while. I was positive back in the start of 2024, but that positiveness has come out. And yeah, the share price, in fact, the chart looks trash right now. The chart looks trash right now. No interest in this one at this point in time. My mind can be changed, however, if they do have or release a good quarterly result or something like that. So that's Hillgrove. What shall we talk about next? Let's talk about Poop company. Oh, I've got to write it in the right section. This company is called Immuron. It's really interesting. The reason I know this company is because they sell something called Travelan, which is traveler's diarrhea. Well, it doesn't give you traveler's diarrhea. If you have traveler's diarrhea, you take Travelan, and it's supposed to cure it or help ease the symptoms. I don't know. I've never had Travelan. No, I've never had traveler's diarrhea. Here we go, Travelan. Yep, this is it. So you can buy it yourself if you want. So here it is, Travelan. So this company, Immuron, sells Travelan. It's expensive, $33.95 for how many capsules? 30. Gee, that's a lot. $1 per capsule. Cool. I suppose if you do have traveler's diarrhea, you don't want it, so you're willing to pay this much. Okay, so I've mentioned this company as a poop company, and there is a reason behind it. There's a reason behind it. So let's have a look at the announcement today. So Immuron and a company called Calmino to treat irritable bowel syndrome. Talk about poop companies. Anyway, so they have Travelan, which is traveler's diarrhea. Now we're talking about irritable bowel syndrome. I'm not afflicted with irritable bowel syndrome or IBS, but it does lead to diarrhea. So that's sort of a good fit, it seems like. They should be experts on diarrhea because they have a product, traveler's diarrhea, and IBS. So that's why I call this company Poop Company. But I'm hoping they do succeed. Now, in saying all that, I've been following this company for a long time because I first discovered Traveland just in a presentation or announcement maybe 8 years ago, and I've just been waiting for this company to hit a little bit of purple patch, or even just becoming a free cash flow positive, but it just hasn't happened. In fact, yeah, the share price has done nothing. In fact, you have a look at the weekly chart. Yeah, it has done nothing over the last 10 years. It's done nothing. On occasion, you see spikes in the volume and the share price. Look at that back in 2020. Look at that. One day. I don't know what happened that day, but on the 21st of July 2020, share price of Immuron, it jumped up 250%. And not long before that, on the 10th of June, share price jumped up 261%. So if you held on, if you had shares just before that, say you had shares at 8 cents, you could have sold about 3 months later at 90 cents. This would have been a 10-bagger in a few months, but you would have had timed that to perfection. And since then, nothing much has happened. Except this. Share price up 89% on the 7th of March, 2024. And then that hype died away fairly quickly, just like we saw back in 2020. And share price really not doing anything right now. But I just like what this company is doing. And I always, whenever this company releases an announcement, I always have a look at it. So that's Immuron. Coming in at number 4, who's going to be the stock of the day? Shall it be Guzman Gomez or XRG? Let's talk. No, let's I don't know. Let's Guzman Gomez. Share price up 1.55%. They did receive an aware letter from the ASX, sort of like a query in regards to their results. 9 pages long. And this is in regards. I heard something the other day and I thought about it. I went, yes, absolutely. So someone said in a podcast, I can't remember who said it, when company releases results and there is a surprise and the share price drops 30% or 40%, what's happening to full disclosure? The company management should have known of this well before they released their results, and they should have done or released a profit upgrade or profit downgrade. So why are the companies waiting until release their results for this bad or good news? They should be releasing that information earlier than they are, because more than likely they do know that information before they release their results. So there is a question about full disclosure happening for these companies. And that's what's happened with Guzman Gomez. Share price dropped a lot, and the ASX is just querying, asking them questions in regards to, I think it's more in regards to expectations and guidance. So, for instance, if we go to the questions, where is it? So this is the ASX letter that Guzman would have received on the 25th of February. Guzman goes, we don't have to, they're talking about the half-year results, and then they're talking about how the share price went from $45 to $38 fairly quickly. They're talking about listing rule 3.1, which requires a listed entity to immediately give ASX any information concerning it that a reasonable person would expect to have a material effect on the price or value of the entity's security. So again, maybe you should be releasing this sort of information earlier than when you release their results. So this is what the ASX is querying Guzman Gomez. Did you have information that your results were going to be worse than expected? And if so, why did you not release that information to the market? They also talk about the definition of aware and a lot of other things. So that's really the questions, and Guzman has to answer it. Oh, here it is. Here's what they have to answer. So a few questions. I won't go through all this. A few questions in regards to if Guzman Gomez had published earnings guidance, if Guzman Gomez is covered by sell-side analysis, the earnings forecast of those analysis. So asking quite a few questions here. Anyway, so the answer that I did find intriguing was, the answer to question 2.2. The method that Guzman Gomez used to translate sell-side analysis forecast into its estimate of market and expectations for each measure of earnings referred to in the earnings information, and in particular whether or not Guzman Gomez used a consensus estimate or an adjusted consensus estimate or a different specified approach for determining this estimate? The reason I like this answer is because it gives us information on who's covering this company. So Guzman actually mentions here that the company is covered by sell-side analysis, whose forecasts are tracked by the company as an indicator of the market's earnings expectations. And they use a consensus estimate methodology to translate these analysis forecasts into an estimate of market expectations. And then in section 2.22, they gave the market expectations. And then just below this, there should be a table. Here it is. And it gives us the expectations versus the actual results. And it was a miss. And the big miss was underlying segment EBITDA. And earlier, Gomez said this is the metric that we should be following to determine whether Gomez is performing, something like that. Anyway, they also missed on statutory EBITDA, but it was a hit. They actually beat profit before tax, and net profit after tax was, sort of it was the same at 7.3 million. So this was a really interesting announcement. Maybe I should read more of these because it gives us an insight to what a company and the management of a company is looking at when it comes to sell-side analysis. I didn't realize they paid so much attention. So that's a new thing for me. A new lesson learned. Maybe not a lesson, but something I've learned today. So that's Gomez coming in number 2, I suppose. And the last one is XReality Group. Share price, only up 5.56%. It was up by more. In fact, at one point today, it would have been up by probably 20%, maybe even more than that, at 4.3. But I understand why the share price has sold off a bit. This is the sort of company, higher risk, that I think less people want to invest in right now because of the massive amount of uncertainty in the markets. So they did release a good announcement. Share price up 5.6%. And the reason this is interesting to me is this is in a way a capital raising. We'll call it an equity raising at a premium. So a debt conversion at 39% premium to XReality market close. They also issued an investor presentation. I might go through this to look at this company in more depth, I suppose. The one thing I do know about this company is they have this XReality. I'm not sure if it's for teaching purposes, that sort of thing. They also have a few more commercial or retail businesses on the side, like the iFly. They also have Freak Entertainment, something like that. And it seems like they want to spin those off. They want to sell those divisions or whatever and focus on XReality. That's what it seems like. I did read something in regards to that. Anyway, so this was interesting. So again, a little bit of dilution here. And the reason I'm calling it an equity raising is because, it's because they get equity. This, who is it? It's Birkdale Holdings gets equity. In fact, they get 92 million shares at 5 cents, 39% premium to the closing price on the 4th of March. There you go. So this is, this Birkdale must believe in XReality Group. Yeah, so a nice little premium. That's why the share price is up. There you go. So let's have a look at the chart for, by the way, I didn't have a look at the chart for Guzman, did I? It's too late now. XRG. We'll have a look at the chart for Guzman Gomez after XReality Group. Okay, so this is XReality Group. You can definitely see why there's been a little bit of selling. Share price went on a nice little rally back in January. Share price went up to 4.8 cents. It pulled back because of increase in fear of the market. And today we saw the share price rally again, but because the share price rallied not that long ago, there would be shareholders underwater, and they see the share price rallying today. It's a story that is old as time. Fear is greater than greed, and when the share price of a company drops, they call it a dog stock. They're fearful. They're losing capital. Their capital is decreasing in value. When they see the share price pop up, even if it's really good news, sell. Got to sell. Got to sell, and not as at a bigger loss as I could. Anyway, so that's why there's been a bit of selling pressure on XReality Group today. Oh, we're in the closing auction. And looks like a share price will close at 3.8 cents. Okay, so on to Guzman Gomez chart. And this has taken a turn for the worst. I would have put fairly weak support. I would have put a support level just there, and it has fallen through that. And the reason I put it there is just because that's the low we saw back in November. Yeah, so share price has dropped a fair bit since they released their results. Not surprising. I have no interest in Guzman Gomez just because of the valuation. If this company had a markup of $100 million, I'd be backing my truck in, even though I don't have a truck. I would buy a truck and then back it in to buy Guzman Gomez shares. So it's all about valuation. A company could be the best company in the world, but if you have to pay a kidney for it, yeah, not for me. Some people might sell their brain for it, but that's their choice. Okay, so I'll talk or answer a few of your questions. And just James Dean, insurance talks, not happy if cyclone hits Brisbane. I would say, and I am going to have a guess, that some of the insurance companies in Australia have fallen over the last week. Let's have a look. Suncorp. This should have dropped a fair bit. Oh, look at that. I don't know if this is related to the cyclone, but I think some of this is related to the cyclone because there could be a pretty big increase in some claims. What's another one? What's it called? IGA. It's not IGA. That's a supermarket. Insurance Group Australia. It is IGA, Insurance Group Australia. Insurance. I can't believe I've forgotten the T code. Insurance Australia Group. IAG. Oh, so close. IAG, IGA, IAG. It's actually in the name. Insurance Australia Group. Oh, jeez. So I'm assuming the share price dropped because of results, because that's a few weeks ago. So we didn't know the tropical cyclone was going to hit. So this has not been affected. And I'm pretty sure QBE is mostly international. I think. I could be wrong. I think I'm trading this and the share price is going up. So there's no issue. I have no issue with this chart for QBE. What's another insurance company? Maybe even health insurance companies are taking a hit because some people are going to be stupid and they'll need hospitals. Scott says, Almonty is intriguing. Thanks for another vid, Kneppy. You're welcome. Almonty is intriguing. I know nothing about Almonty, except maybe it should be into almonds because it looks and sounds very much like an almond company. Almonty Industries. The chart is going to look really stunning. What does this company do? Shareholder approval received for proposed US domestication. So they don't want to become illegal immigrants. They want to domesticate. So talking about animals, maybe? Cats? Dogs? Okay, what does this company do? Let's have a look. Almonty enters offtake agreement with SEAH Group. Final commitment received under equity placement. Almonty announces intentions to relocate to United States. Domestication. Okay, let's have a look. And there's no about section. Oh, I really hate that. Looks like they're talking about production. Oh, here we go. About Almonty. The principal business of Toronto, Canada-based Almonty Industries is a mining, processing, and shipping of tungsten concentrate from its mine in Western Spain and its Panasqueira mine in Portugal. That's really interesting in itself. Yeah, I know nothing about this company, but I do know the chart looks pretty good. And the ticker for this is AII, I believe. I think I might be wrong. AII? It is AII. There you go. It is listed on the Canadian Stock Exchange. This chart's going to look good. Yeah, look at that. Look at that massive run up. So we had a massive increase in volume in May, June of last year, and then the volume just dried up. Share price kept on going up, and then massive volume starting in January, and the share price has just taken off. And look at that volume, massive volume. Now, we saw that massive increase in share price. I always get a little bit nervous when that happens, and I always think there's going to be a pullback. This pullback has not been that strong, which is good. That's a positive sign. It has pulled back towards the 25-day moving average. This could be a sneaky buy because this pullback has not been as severe as what you might fear when you see share price of a company rally like that. It's a pretty big rally, pretty impressive rally for our Monty industry. So I'm going to have to agree with Scott. The chart looks intriguing. Tungsten, don't know, but yeah, I'll just agree with you. Our Monty does look intriguing, but I'm just looking at the chart. Uranium down due to the thought of US signing critical metals with Ukraine. That's true, yeah. That's one of the reasons why uranium is down. Did I not mention that? I think I should have mentioned that. Bill Walton does not like Trump, which is fair. Everyone should have an opinion. So I don't like some of his policies. It's as simple as that. I'm not a big fan of people just following a political party and just believing in that political party. I find that weird. Sort of like someone just follows a band and whatever that band releases, they're gonna like. That doesn't happen to me ever. I do like some bands more than others, and there's quite a few songs of the bands I do like that I don't really like all that much. And there's also songs from artists I don't like at all, and on occasion I do like a song. Who's a good example? There's plenty of examples which I won't talk about. Is each day traders for breakfast asked, is Delorean back to operating cash flow negative? This is another position I sold out of. I just didn't like the chart. It was pulling back too much. Let's have a look at the most recent Appendix 4D. I have not looked at this yet. I don't think it'd be that negative. So the question was, operating cash flow negative. I would say that operating cash flow positive, maybe free cash flow negative. I'm just guessing though. And so let's have a look. Here we go. I clicked on the right table. Oh, they are. They are operating cash flow negative. Not necessarily a bad thing. So one of the reasons why I would say it's not necessarily a bad thing is because of changes in working capital. Now, they could have seen a significant increase in trade receivables, and that could suppress receipts. Or on the flip side, they could have seen a massive increase in trade payables, and that could be beneficial to their operating cash flow. So even though it is negative, and it is true, it is negative, sometimes I do like to have a look at the balance sheet. So I might look at, say, working capital. Sometimes they'll put a number just here next to the operating cash flow, and that would be what do they call it? A reconciliation of cash flow to profit, and they will actually show working capital changes in that reconciliation. I think it's mostly used at the full year results, but sometimes they will put it into a half year. And maybe if you just have a look at 7. Let's have a look at 7. Note 7. So a lot of people just completely ignore notes. Notes are full of information. Note 7. So looked like there was an increase in, there was a decrease in trade payables, accrued expenses. Yeah, anyway. If I don't have that reconciliation, it's hard to know exactly. Sometimes you find it. Yeah, I don't think we're going to find it because they didn't put in the notes. They didn't put a number next to the operating cash flow. That's where you usually see it. Yeah, you're not going to find it here. Anyway, so they are operating cash flow negative. That's what we have discovered. But there could be reasons behind it. Thank you, Sankar. Okay, so I'm just going to end it there because I'm getting towards 1 hour. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.